Hi everyone, I want to welcome you especially to today's live trading session. My apologies for coming up 1 hour later, getting 1 hour 30 minutes later, right? Okay, so got a couple of things to do, so I had to round it up so that I would take out my time to have this live session without rushing or probably not paying much attention to what I'm going to be teaching you this afternoon. So quickly, I would like you to go ahead and share the links to pro traders, newbies, community members, your friends, your colleagues, those who aspiring to trade, those who want to get direction for this week's directional bias. I'd like you to send out the links to them. So that's what I'm doing right now. Okay, I'm sharing out the links to my contacts, and at the same time, I want to confirm the audio. Your colleagues and those who. All right, so we've got good audio. So what are you waiting for? Send the links out now and let them all join. We've got good audio for them to hear what I am talking about this afternoon. All right, so the market is giving us a comeback, and those of you who've not been with us all this time may not understand, and those who've not been following up, the market and the trends may not really understand. For some time, trading crypto and trading forex has been a little bit challenging, and that's because of the war that has been happening in Iran. So it affected a lot of things because, especially because it was not just a war between Iran and Israel, it was a global thing, and you all know how um, such kind of hazardous experience usually affects the forex market, and that's part of the reasons why we didn't quite get much happening in the market this period. And some of you might be thinking, like I met someone who said, I took a break in trading. I don't take break in trading. Okay. So when you find that I'm not trading, I want you to know it's because of the opportunities. Okay. So I trade opportunities. I'm not just in the market. You see, if you get into the market just to trade, you will lose all of your money. Okay. You don't get into the market just because you want to trade. You are only in the market because you want to make money. And when the opportunities are not present, you cannot make money. Okay. Now, if you have mastered the trading skill, you understand that terminology, what I just said. But if you're still a newbie and you still getting to, learn the market, you might not understand that. So, but please take note. I didn't take any break. I'm here full time. I'm a full time trader, as you all know, and I didn't stop doing what I do, and I do what I do best. Okay. So quickly, I'm going to be sharing my screen right now with you so that I can possibly show you my market's perception, my market directional bias, and all that I'm expecting, the market to do for this week. I'm sure I'm talking to people who are ready to make money. I'm not talking to people who are here to waste time, right? Okay, so like as we all do, I'm going to be sharing starting from the dollar index. Okay, so let's go straight to the dollar index and let's see what the dollar index is doing. Please don't get into the market without knowing exactly what the market is doing. If you do that, you're going to lose all your money. Okay, that's how trading is. All right, so this is the dollar index. This is actually the particular parts I use for making my analysis, but I don't like this candle. This candle is so unreal. So for that, I would prefer to use capital.com to just have a look on the dollar index. Okay. So if you look at the dollar index, you will see that it massively went bearish at one point. Okay, this is US 37. All right, capital.com. Okay, so we're there for dollar index. So for the dollar index, all right, so I hope my screen is being shared. Yeah, I think so. Okay, so the dollar index is it's been bearish for a very long time. You know, it gave this massive bearish move. First of all, it gave this imbalance and made us feel like it was going to balance this imbalance. Of course, you know, one of the basic rule of trading is price most times go towards the direction of imbalances, balances the imbalances before heading towards the new area or the new directional bias. So that's why when there's an imbalance, most forex traders begin to spot opportunities there. Okay, so this imbalance is something that has kept us looking closely all through this period, you know, because we are concerned, we want to know what price will do with this imbalance. Okay, let me just use this cycle to spot it. And this is it. What will price do with that? Price should most definitely go there, fill it up before, if it's going to continue going bearish. All right, but this is a typical downtrend on the swing side. All right, so but in the internal range trend, it is an uptrend. Okay, now in the internal range trend, it shifted to the downside for a facilitating of what? Of a pullback, of which I am expecting it to go bullish, at least to an extent. Not maybe not, you know, very long, but at least to an extent. Okay, and so because of that, I'm going to be trading the dollar index bullish in this new week. And what am I expecting to see? I'm expecting to find, first of all, a market structure shift. Okay, or a break of structure, whatever you call it. Some call it market structure shift, MSS. Some call it break of structure, BOS. Some call it change of character, CHOCH. Okay, as the symbol may be. But for me, a break of structure is when a particular structure that has persistently continued for a while stop its continuity. Okay, take for instance, okay, this is a structure, right? So if for any reason price takes out this previous strong lower low, right, lower high, right, yeah, lower high, if you are speaking from this point, or if you are speaking from this point, is lower low. Okay, so if price takes this particular lower high, then what it means is that price has shifted structure. Let me show you what that means. Right, so let's use where is my tool now? Where is my tool now? I haven't seen that tool in a while. I got you. So let's say price for any reason comes and take out. Okay. Now that is a break of structure because that is the strongest low. Now, how is it called the strongest low? Because before you can how is it called the strongest lower low? This is the reason, excuse me, why it's called the strongest lower low, because that's the particular low where price gave the most recent bearish momentum. So how do you measure momentum? Momentum is seen when you find at least three candles, three, if it's on the bearish side, three bearish candles printed at the same, printed in that direction. That's a strong momentum. Anything less is not a strong momentum. Then the size of the candle also matters. You know, when you are finding short candles, little candles, or candles that are giving reversal sign, that might not really be called a strong momentum candle. Okay, so when you find such, that place where price is price gained strong momentum and gave a break in the previous low is usually what I call the supply zone. Okay, I call it what? The supply zone, because I trade supply and demand. Now those who trade support and resistance, they call it resistance zone, right? Is that what they call it again? Because it's been long I looked at what they call it again, because sometimes I usually mix up support or for resistance because I don't trade support and resistance. So I think support is up, right? Let me just check that quickly. I think support is up while resistance is down. But on my normal thinking, I would have thought support should be down while resistance is up. All right, so this I just said now is what's correct. Support is down, resistance is up. So whatever price sees up is resistance. What price sees down is a support. Okay, so that's what actually more correct. So now this, let me now use their term, if that's your term. This resistance point gave a strong momentum to take out the previous low. So this is the lower low and this is the lower high. Okay, now for price to have taken out this lower low, what it means is there is a structure that is what? Bearish. Now this is not the strongest. That's a mistake I made a lot of time when I was a newbie. Some will say this is a structure. Now this is why it's not called a structure. No momentum. Someone says that boy it broke. Yeah, it broke. But if you looked at the law I gave you about momentum candles, I just told you now that at least 3 bearish, if you are looking at the bearish momentum, must be printed. And if you look, you cannot count any 3 bearish candle that broke. Those bearish candles are the candles that broke, not the candles printed before the breaking. Like this now, if you look, you will see 3 here. They did not break, so they failed to break. So you can't call them momentum candles. Now the only candle that broke is this long one, but it's just one. So that's not a good, that's a manipulated move. Okay, and most times people use that as a break of structure. That's what we call fake break of structure. It looks like a break of structure, but it's not an actual break of structure. So that one will not consider the break of structure that you need for you to consider if structure has changed, right? All right, so this is a break of structure to the downside, right? Then this lower high, if price for any reason takes it out, that lower high is called, the price takes it out, some people call it break of structure. Can you see now why some people call it market? I would prefer to call it market structure shift or change of character. You know why? Because the one that goes down is already break of structure. So if you call it break of structure, people might still think you're talking about going down. So I prefer to call it market structure shift. So something like this. So this one quickly is a BOS. You see that, right? Okay. So if for any reason price takes out this one, it should call what? An NSS. So for a while now, I don't use labels. Okay, because I've mastered my skills, so I don't need all these labels. But for the sake of this class, you will need it to understand what I'm saying. So once price has a market structure shift, a market structure shift means that price is about to consider changing direction. So price will not change any direction until this is taken out. So until this is taken out, price will keep on going bearish. That's what it means. So that's why it can be considered as a market structure shift. Now, a market structure shift is equivalent to a change of character, also known as CHOCH, right? That's the symbol. I don't think I used that. I used to use it one time, but I stopped. So once price takes out this market structure shift, I will be buying the dollar index. Because of the place where price is, I don't sell on demand areas. I don't buy on supply zones. Now, what do you mean by demand areas? Now, when you go to the 4-hour time frame, you find out that price is currently on a demand zone. Why? Because this was the zone in a higher time frame that broke this structure to the upside. So when price is there and you're selling, you are looking for trouble. And that's why most times you are either liquidated or you are getting wrong predictions, and you're not getting the right directional bias of the market. Now, but most times enthusiasm and the wish to trade pushes most quack or newbies or traders that have not mastered their skill to want to be looking for entry. But the right thing to do is patience, and waiting is also part of the skill. So the right thing to do is to wait for the correct things, your rules, your law, your strategy, okay, to play out. The right thing to do is to wait for price to leave such zones before you begin to spot your entries. And that's why I'm telling you that once I see a market structure shift, be expecting to see my structures before I begin to consider a short buy. Now, when do I go for a longer buy? After a market structure shift, there should now be a break of structure on that new market structure. Of course, this break of structure is the bearish one. Okay. So after the market structure shift, something like this, let me show you quickly. Now, this is the market structure, right? There should be another break of structure to the upside. I hope you get that. Okay, let me just show you now. So that particular break of structure is what confirms the new trend. So after a market structure shift, the next break of structure is a trend continuation break of structure. I hope that is clear. I just thought to chip in that. Now, I've taught you all of this in most of my videos and most of my classes, but I just chipped it in for someone who might be hearing this for the first time. So that's the reason why I will be buying the dollar index. So that means when price, for any reason, gives me that inverse in GU, I will be selling GU. You get that now? Because the dollar index is directly proportional to GBPUSD. So whatever the dollar index is doing is what G is doing on the inverse, on the opposite. Okay, so I use that to perfect and help my analysis to be more accurate. Now, I didn't take this in case you're thinking. I just put it there because I was waiting for a shift in structure. Now, it didn't play out as expected. So what am I expecting to see here now? Now, someone might say, okay, so where is the correct break of structure here? Now, if you look closely, there are two break of structures here. There is an internal break of structure and there's an external. So it's not like the dollar index. So this is why Forex is a bit difficult, because what you're expecting to see, having understood the terms of Forex, is not what the charts might now give you. So if you look closely now, you see that this is a break of structure. Now, this is an external break of structure. Okay. Now, this one that is printed here is an internal break of structure. So because of that, if you use this break of structure to do your judgment, you will be wrong. Because this break of structure is for this facilitation of this pullback that's already happened. Then if you look closely, you see another fake one up here. I cannot even consider that one at all. So taking out this low cannot be considered as a shift in market structure externally. So you need to perfect your understanding on internal range liquidity and external range liquidity. So this is an internal range liquidity, while this one is working for an external range liquidity. Now let me now show you that. Let me use a box to make that more clear. So there is a range of market structure in this box. If you look closely, that's what this break of structure signifies. So you see market is moving like this, right? So let me use that arrow and show you again. So today's class is taking more time because I'm taking more time to explain more, and it's for someone here. Can you see? So this is a structure on its own, and that break of structure I recognized is the correct on this kind of structure. This other one is the internal. So until price takes out this low, that's actually the correct break of structure that you can use to trade this bearish move. And that's what I'm waiting for price to do. Now someone says, oh, this is an what did they call it again? Head, left shoulder, right shoulder pattern, A pattern. Yeah, that could be correct, but I don't trade A patterns. I don't trade A patterns. Okay, I have a stronger precision to that, but you are correct. That's what it is. This is a head, left shoulder, right shoulder pattern. For those who trade it, they begin to see, yeah, it's true. This is a bearish confirmation. So for me, once I get that, I will go bearish. Now, first one, remember, is MSS, market structure shift, is a short. Is the second one, which is a break of structure in the market structure shift direction. That's the bearish direction that gives us the long. So first one is usually a short. The next one is usually the sniper entry, which is the long. Okay, so take note of that. So if you look now, you now understand why I said that this breakout structure cannot confirm that. So, but for those of you who want to now go on a lower time frame to trade, yes, you can trade that because that's an internal range liquidity. How do you trade it? It's simple. If you look closely, you can take out this one. Okay, we're done. I'm done explaining with that one. So let me give you the one on the internal range. Okay, so this is it. This is the internal range. So how do you trade it? It's simple. Now this is a break of structure, right? This is another break of structure. So price has shifted this structure on the internal side. So if you want to trade it, simple. All you need to do is to get your confirmation on this side, okay? But your take profit should be within that range. It cannot go outside that range. So that is for short move. That's for scalping. Now you can understand what scalping is. So short move, scalping, quick move. And if you are not a pro trader, you will hit stop loss. Just understand that because it is easier to understand the chart in higher time frames than lower and smaller time frames as such because of the the way price usually happens in 1 minute. Because of course, if you are trying to consider this in the 5 minutes time frame, you will need to play with the 1 minute time frame. And if you don't know how to play with the 1 minute time frame, you may get that wrong. So take note, I've taken much time on GU, but it's for someone you need to understand because that's our major pair that we trade. Okay. So that's what we're going to be doing with GU. And for the VIP community, I will repeat that with EU. It's been a long time I looked at EU. And the reason is because the market is not good. Okay, but now market is coming back. I may decide to look. So I'll repeat the same thing with EU as you can see, but I'm already discuss this with the VIP community. As you can see, once price takes out this low, I would consider to buy EU. I'll do the same thing with NU. I'll do the same thing with AU. I'll do the same thing with all the U's. Okay, so let's go straight to JPY basket so that I can speak to you on that. So for the Asian banking session, okay, that will work for London session and New York session. So London session has passed for today, no opportunity. New York session is on right now. Still, there are no much opportunity. So we might not take any trade today. In case you see that I'm not trading today, this is the reason there are no entries yet. Now, if I see an opportunity on GU, unless it's a setup, I may trade it during the Asian bank session, which opens from 1 a.m. So you can see why sometimes I'm awake. Okay, because I hardly sleep most times. But if I don't see an A setup, if I see a B or C plus setup, I will not trade Forex by Asian session because the Asian session does not favor GBPUSD and the rest of the USDs. Okay, it only favors JPY. So you see why I trade JPY. So I trade JPY because it gives me advantage. So if I miss, like today, I've already missed the London session and the New York session because there were no opportunities for me. Now, as a trader, if you keep waiting for that single pair that you trade to make you rich, you might wait longer. But it's good to trade single pair if you are a newbie. But when you're no longer a newbie, it's good to introduce other pairs because your A plus setups might take time to play out. So if you have other pairs that you analyze, it helps you to be able to find precision in them and still trade them while you wait for maybe your major pair. Take for instance, some of you will see that once in a while I post entries on gold. Okay, even though gold is not my major pair, gold is very volatile, very, 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 very sensitive and a very one of the pairs you should be very careful about. Silver, the same thing. Both of them are like brothers. Okay, printing almost the same candles. You can see both of them. So you see, most times I trade them, but I trade them times like this. Like now, I just looked at them, no opportunities. Even though I discussed that with the VIP community, not with the free community like this free class. Okay, so the same thing with Bitcoin and Ethereum. So this is Bitcoin. Okay, so no opportunity yet. So, but that's why I'm looking at it, because as long as GBPUSD and GBP are not giving me my entries, then I will not consider metals, crypto, and stocks and Tesla. That's what I do with Tesla, as you can see. That's why Tesla is here. And exactly the same thing I do with US 30 commodity. That's exactly what I do with US 30. So, but all of them don't have opportunity, as you can see. Then I now sometimes I look at GBP CHF, because the Swiss money is a little bit stable. As you can see, it's about to give me an opportunity. So I'm just going to just look, because it's broken this structure pretty good. Pretty looks good. Let's look at 4 hour. If 4 hour is confusing, then we'll leave it. Okay, 4 hour. Okay. It's not really on a demand or supply zone, but it's on a liquidity side. So it might just be a sweep of liquidity. So it's also a very sensitive and risky area to trade. But only an A setup would work for this. So if for any reason I see an A setup here, I'll take it. But until then, I'm just going to be looking at it like this. Okay, so that's it for GPCHF. So, but let's go straight back to JPY. So you can see why I look at JPY. So JPY is for Asian bank session. So since morning is gone already, London, afternoon is gone already to evening, which is New York for me, I'll be expecting that I'll be awake 1 a.m. to try out JPY. Now JPY too has been massively bearish for a while. As you can see, massively bearish, but it has shifted structure on the upside. If you understand what I taught you about market structure shift, it has. It's done internally, it's done externally. So this is the external shift of structure, this is the internal shift of structure. It's done that. And in that case, it is going to give us bullish signs. And this bearish move is like an all-time bearish move. For those of you who were in the last weekly analysis I did, you see that I showed you that it's the least it's done in its existence of time. I just want to think so, because that's what TradingView is showing me. So, but maybe that's the data that TradingView has, but this is what it's showing me. So the last time JPY has been losing value from inception. So inception, as you can see from trading in the Forex, is 2019, 1st April, based on the data I have here. And it's been like that. So this is the lowest it's ever done in its lifetime, 2026. So in that point, in that case, you cannot easily predict the bearish move. You cannot, because trading predictions are usually more precise and mostly done with previous occurrences. So there are no previous occurrences yet. So you can't really tell. And that's the reason why it's difficult. It's bad to trade what you cannot see. And that's what I regard as trading blindly. It's better to trade what you can see. So because of that, I prefer to trade JPY when it goes bullish. And this is it. There's a market structure shift here, even though it's internal. So I'm going to take that to this point. Okay. And the external one is on the upside. Where's the external one? This is it. Okay. So this internal one could be a market structure shift in the internal side. Okay. But this is the real market structure shift on the external side. I hope you get that with what I explained. It might take you time to get it if you're still a newbie, but if you're used to the chart, you will know what I just said. Okay, so because of this, once price gives me this bullish confirmation, just as I explained to you for the dollar index, I will go bearish on GBP JPY, Euro JPY, AUD JPY, NU JPY, all of the JPYs. Did you get that? So this is it. I'll go bearish. So this was a bullish anticipation, but it didn't get to the entry point. So that's out. So I'll go bearish. So how am I going bearish here? Same thing. I will not just come here and just go bearish. Same processes I use in getting my confirmation there is what I will repeat here. This is what helps me get good entries. This is my strategy. So as long as price gives me my confirmation on this path, so price must take out this. It must. Until that happens, I will not go bearish. So, but once that happens, I will get my entry. Okay, so my entry should come from this point. So that's why I'm putting these trails. It can help me remember, because sometimes when we're done doing analysis like this, if we don't watch this video again, we might not remember. So this is what I'm expecting JPY to give me. So I'll be expecting this to play. So I'm going to be looking at the chart 1 a.m. during the Asian session, either at the opening of the Asian session or in the midst. I don't like trading the closing of the sessions. Okay, because sometimes it might close, the market might close earlier than the official closing time. So I prefer to trade the opening or the middle if I find myself. Once I don't find myself in the openings or in the middles, I'm out. Just like the New York session is still on. I think it's going to be closing later, but I don't consider it open because I don't trade the closing of the New York session. I only trade the opening because I find my precision and confirmation at the opening, and I find better momentum. I like to trade the market when there's momentum. It helps you to protect yourself from being the liquidity of the market. So that's it now on JPY. Okay, so I already showed you what silver is doing. Nothing there. Nothing there. Okay, I see anything, I'll let you know. So nothing is ranging. It's not good to trade a ranging market because it could be manipulated. It's usually better for swing traders. And then US 30, there's nothing there. If I find anything, I'll give you an update on the group. So stay active on the group. Tesla, there's a bearish, most likely bearish confirmation. It's going to happen on this side. So I find confirmation, I'll let you know. Okay? And it could be sniper. It could come here. Because it's shifted already here. Gave another one. Even though this is a strong demand zone, but it could be sniper. I have what I look at to see that. So I find out, I'll let you know, and we'll do it. So that'll be all on Forex, stocks, CFDs, cryptos, commodities. So we're going to go straight to synthetic. So when it comes to synthetic, I discussed with a free community volatility 25 and jump 25. My eyes have been on the charts, no opportunities. If I find, I'm going to let you know. So if you go to volatility 25, you see that so a strong demand zone. I don't sell on demand zones. You can see that. So I prefer to look for a buy, and there is no confirmation. There's no buy signal. Okay, so that's why you see I can see this is it. No buy signal, no shifts, right? So everything you're going to find there will be manipulation. But for someone who wants to trade in a lower time frame, you can actually find something there. But I don't like those low time frames. So this might be the only one that might give us an entry because it's bullish in the internal, but on the external it's bearish. You can see it's shifted to the downside. So I find any bearish confirmation, I will sell jump 25, and I'll let everyone in the community know that by posting it as the latest update, and let you all know that you could do that. Okay, so that's what I'll be expecting, and that closes today's weekly analysis. So I'm going to save that for future use, and that will be all for this week's weekly analysis. All right, weekly live class. Sorry, not weekly analysis. I've not been doing weekly analysis and weekly review for a while, and the reason is because of the instability in the markets. So I kind of feel like I'll be wasting my time if I keep on doing that, because there's really nothing to show you. It's better to do that when there are entries. Okay, so I can see you, Dr. Kemau. It's nice to see you. Thank you for joining the live session today, and I hope you were able to learn a few. And I wish you all the best for this new week, and I hope you succeed. And I wish every other person who is connected to this live session an excellent trading week, a good trading week, profitable trading week. Make sure you make money this week. Don't lose your money. Make money. And I promise and guarantee you that as long as you follow my lead and my guide, you won't lose money. You make money instead. But be patient. Be patient. Don't think, oh, he's not posting entries, so I gotta go look for entries. I go to Jeffrey's group. I go to Habi's group. Or I go to these other groups. I've always told you, if you do that, there are risks to that, because it means you are looking out for their profitability. You've not also looked at their loss of streak. So it might just be when you are taking their entry that they are on their loss streak. So how do you balance that? So stick to a mentor, stick to a particular guide. Don't jump from here to there. If I don't have a good understanding of the skill, I would have encouraged you to look at other mentors. But because I know what I'm doing, and I know that what I'm doing is good for you, that's why I can recommend what I'm doing for you. Thank you very much for that beautiful compliment, Dr. Kemau. Thank you for being a diligent student as well. All right, so see you at the group. Stay active, because I'm going to be giving updates there. Have a great week.